Good afternoon, all of you. Renisha from Commodities Research. Today I'm here to talk about the weekly outlook of commodities. Along with the other risky assets, prices were pressured last week. The market was influenced by three macroeconomic developments, including the first one, a potential bailout for Ireland. Over the weekend, Irish Finance Minister said the country will apply for a financial assistance from the EU and IMF through a contingent capital fund, as the banks were too big a problem for the country. The second development was acceleration in tightening measures in China. On Friday, People Bank of China raised the required reserve ratio by 25 basis points, a second time hike in 2 weeks, to curb excessive lending and inflation. The move indicates that the government is highly concerned about the inflationary and the asset bubble risk. It increasingly likely interest rate hike may be announced in coming weeks. The third development was the effectiveness of Fed QE. Fed Chairman Ben Bernanke commented on the Friday that the US inflation has declined noticeably since the business cycle peak, and further deflation could hinder the recovery. Defending the Fed's QE2, Bernanke said insufficiently supportive policy in the advanced economies could undermine the recovery, not only in those economies but for the world as a whole. After being bloodied and bruised for several weeks, dollar rallied a bit versus euro in the last week over jitters regarding the insolvency of Irish banks. The European Union and the IMF and UK all pledged to help the beleaguered banks, even as the Irish government attempted to fend off the aid. Acceleration in Chinese tightening poses a threat for commodities, as China is one of the biggest consumer of energy and base metals. During the week, the worst performing sector was base metal, in which zinc and lead plummeted 10%. After surging to record high at $89.66 on November 11, copper prices broke 8,000 levels on Wednesday and finally ended at 8,400 on Friday. Crude oil price slumped for most of the week despite huge decline in oil inventories. As I told in the last week video that crude oil will take support at $80, and the same thing happened. Crude oil fell from $85 to $80 during the week and then ended at $82. Although precious metal declines was driven by the broad-based sell-off in the commodity sector, strong bonds later in the week indicated underlying strength in the complex. Indeed, long-term weakness in the US dollar and low-rate environment in advanced economies will continue to support this uptrend. Gold ended the week with modest drops, falling around 1%, while silver gained 5%. In silver also prices got support at $25, which I told last week that the $25 is a crucial support, and prices rebounded from that level to end above $27. In the coming week, developments in the peripheral European economies will remain under the spotlight. In US FOMC meeting minutes, which would be released on Wednesday, would be closely monitored, where the 600 billion asset buying program would be Fed view will be given on that program. Revised data for US and UK GDP will also be closely monitored. Commodities will continue its uptrend. Gold, which is currently trading at $1360, is expected to face resistance at $1,400, and silver is expected to touch its record high to trade above $29. Crude oil is expected to trade in the range of $80 to $85, while copper is expected to trade above rupees 400 at MCX. Goodbye from now, and happy trading for the next week.